And what I found as the years have gone by is that the more complex you make it, the less likely people apply it. It's much harder to simplify something than to make it really complex. It looks and seems sophisticated, but no one does it.
Are you missing out on the secret wealth strategies that top investors swear by? From adaptive investing to rare art collections, these unconventional methods are changing the game. Don't let others beat you to the punch. Start building your wealth the smart way today. Adaptive strategy. In 2025, modern investors are discovering that adapting their investment strategies based on real-time market conditions can lead to impressive results. Instead of sticking to a rigid plan, they shift their approach as the market fluctuates. One popular figure, Warren Buffett, known for his adaptive strategies, emphasizes the importance of adjusting tactics as situations change. His method shows that flexibility can be more beneficial than sticking to one path. Take, for example, Elon Musk, whose investments in emerging technologies like SpaceX and Tesla reflect his ability to pivot and stay ahead of the market. He quickly adapts, whether it's with shifting market trends or new technological advancements. In this strategy, investors carefully monitor trends and make timely adjustments. The key is not to predict market movements, but to react strategically to them. The success of Musk and Buffett proves that a dynamic approach can be incredibly effective in building wealth, and it's a strategy many modern investors are now exploring for better long-term returns. Alternative assets. In recent years, investors have turned to alternative assets as a way to diversify and reduce reliance on traditional financial markets. Unlike stocks or bonds, alternative assets like real estate, private equity, and even cryptocurrencies offer unique opportunities for growth. One prominent investor, Richard Branson, has long been a supporter of diversifying his portfolio through ventures like Virgin Galactic and other unconventional investments. As traditional markets face volatility, these alternative investments have become an appealing option for modern investors seeking higher returns. Take, for example, David Beckham, whose investments in the Inter Miami soccer team and other non-traditional assets have yielded impressive returns. By focusing on assets with less market correlation, he has built a wealth portfolio that withstands economic fluctuations. The key takeaway is that while traditional assets remain important, alternative investments provide an effective way to diversify and potentially increase wealth over time. Value averaging. Value averaging is a strategy that has gained attention among modern investors looking for smarter ways to invest. This approach involves investing varying amounts of money based on the performance of a portfolio, rather than sticking to a fixed investment schedule. Famous investor Michael Burry, who predicted the 2008 financial crisis, has spoken about how such strategies can potentially enhance returns. For example, if an investor's portfolio underperforms, they invest more to bring it back on track. On the other hand, when it performs well, the investment is reduced. This helps in achieving a specific growth target over time, rather than blindly investing at regular intervals. The key idea is that value averaging allows investors to capitalize on market fluctuations, ultimately resulting in better returns. It's a flexible, dynamic approach, and while Burry hasn't publicly advocated for this, his investment philosophy aligns with such strategies, proving it can work when applied thoughtfully. Tail risk hedging. Tail risk hedging is a strategy that protects investments from extreme market downturns. It focuses on mitigating the risks associated with rare, severe events that can significantly impact a portfolio. Notable investor Mark Spitznagel is a key advocate of this approach, which involves purchasing options that can profit when the market takes a sharp dive. Spitznagel's firm, Universa Investments, has been highly successful in using tail risk hedging to protect against market crashes, like the one in 2008. During such times, traditional strategies often fail, but tail risk hedging shines by generating returns when most portfolios suffer losses. The strategy may not generate consistent profits, but during financial crises, it acts as a safety net, ensuring long-term growth despite market volatility. Spitznagel has proven that with proper execution, it can be an invaluable tool for modern investors looking to safeguard their wealth against catastrophic events. Goal-based investing. Goal-based investing is a strategy where investors align their portfolios with specific financial goals, rather than focusing solely on market returns. This method emphasizes tailoring investments to meet set objectives within a predetermined time frame. A key figure in this approach is Tony Robbins, who has often spoken about how setting clear financial goals can enhance investment outcomes. For example, someone saving for retirement may have a different asset allocation than someone investing for a down payment on a house. By aligning your investments with your goals, you can focus on achieving milestones like college tuition, a vacation, or financial independence. Robbins advises investors to use a combination of stocks, bonds, and other assets, depending on how soon they need to access their funds. The idea is to match risk tolerance and investment choices with the urgency of each goal. This strategy allows for a more structured, disciplined approach to investing, making it easier to stay focused on long-term objectives. Niche assets. Investing in niche assets is an unconventional but increasingly popular strategy. These are unique, often overlooked investments that can provide high returns while offering diversification. Celebrities like Serena Williams have been known to invest in niche areas like tech startups and luxury fashion brands, proving that non-traditional assets can offer substantial growth potential. One such niche asset is investing in marinas, which has gained traction among wealthy investors. Private equity in areas like this allows investors to capitalize on specific industries or real estate sectors that traditional markets might overlook. Similarly, wine investments, where bottles or collections appreciate in value over time, have become a popular option. By focusing on assets with lower correlation to mainstream financial markets, investors can reduce risk while potentially seeing higher returns. It's a strategy that allows investors to stand out and achieve success in unexpected areas, making niche assets a valuable addition to modern investment portfolios. Alternative lending. Alternative lending is a growing strategy where investors participate in peer-to-peer (P2P) lending or invest in private credit markets. This method allows individuals to bypass traditional banks and lend directly to borrowers, often at higher interest rates. Investors like NAST have ventured into this space, supporting online lending platforms and tapping into new markets. One well-known platform is Lending Club, where individuals can lend money to small businesses or consumers. In return, they earn interest on their loans, often yielding better returns than conventional savings accounts or bonds. For many modern investors, alternative lending presents an opportunity to diversify their portfolios, gaining exposure to markets that are generally out of reach in traditional financial settings. Celebrities and wealthy investors have found this method lucrative, with some even investing in private credit and real estate-backed loans, making it an attractive option for those looking to increase wealth outside traditional avenues. Cryptocurrency. Cryptocurrency investments have become a powerful wealth-building tool for modern investors, with figures like Elon Musk leading the charge. Musk's public support of cryptocurrencies like Bitcoin and Dogecoin has pushed these digital assets into the mainstream, encouraging others to explore the potential of blockchain-based investments. Cryptocurrencies offer high potential returns, but also come with significant risks due to their volatile nature. Investors like Cameron and Tyler Winklevoss, founders of Gemini Crypto Exchange, have seen substantial growth by investing early in digital currencies and blockchain technologies. Their success has made cryptocurrency a more accessible and appealing option for both seasoned and novice investors. For those willing to navigate the volatility, cryptocurrencies offer a new frontier for wealth accumulation. The key is balancing risk and reward, knowing when to buy, sell, or hold. Bitcoin, for example, has shown massive growth since its inception, providing investors with huge returns if they time their investments right. Art and collectibles. Investing in art and collectibles has become an unconventional yet lucrative strategy for modern investors. Celebrities like Leonardo DiCaprio and Snoop Dogg have long invested in rare art pieces, vintage cars, and other collectibles, turning these items into high-value assets over time. One such example is Basquiat's artwork, which has sold for millions at auction. Art, like rare paintings or sculptures, often appreciates in value as it becomes more sought after by collectors. Similarly, classic cars and rare sports memorabilia also offer significant returns for those who invest early. Investing in art and collectibles allows individuals to diversify their portfolios with tangible, often unique assets. Unlike stocks or bonds, these items are less prone to market fluctuations, making them a safe haven in uncertain times. Celebrities have recognized this potential, proving that art and collectibles can be more than just hobbies. They can be powerful wealth-building tools. Don't miss out on the financial revolution. In our next video, we'll dive into how millennials are redefining financial success in 2025. Hit subscribe now and stay ahead of the curve.